I'm really excited to be joined by Ousmane. I think it's cool to have supplemental insight. We talk a lot about what we're seeing across our, at this point, 95 plus customers. And I think it's really important to bring in that audit perspective. In terms of sort of my background and want to give you just a teeny bit around Auxilius, I'm a former healthcare investment banker, growth equity investor, and then I've operated healthcare data and analytics businesses before starting Auxilius in 2020 with Adam Wiseman here today. It's interesting starting a clinical trial financial management business in 2020. First and foremost, the term clinical trial financial management, the only place you could find it on the interwebs was metadata explaining their payments platform. And if you've used metadata payments, I don't think that that's like end-to-end clinical trial financial management the way that we think about it today. Also, when you go talk to CFOs in 2020 about clinical trial financial management, they say, well, you just press this button and funding comes in. So I don't know why we need to be managing our clinical trial financials. And so as we know, and as we've heard about on multiple of the panels today, that has shifted markedly since 2020 when Auxilius was started. We are not only seeing it among our 95 customers, but we're seeing it in the markets. We're seeing it as investors talk, as we talk with our CFO customers, that clinical trial financial management is today's strategic priority. What does this actually mean? I'm borrowing Ray Dalio, who definitely thinks about it in a different context, but I love the notion of radical transparency into R&D spend. We heard a lot about needing to be efficient with capital. I think it's an endeavor and we certainly need to do that. But what you guys in this room need to understand is how to do that. To absolutely be able to drive capital efficiency, you need radical transparency into your R&D spend. Where are those dollars going? Which site is invoicing you? Having sort of that full view is critical and one of the key parts of financial management. Internal and external efficiency in key finance workflows. I think we heard about it a lot today. I loved the question on how do you think about G&A as a kind of percentage of your overall P&L. The reality is we should be driving efficiency in those workflows so that we can bring that number down relative to the dollars we're spending on the R&D. The final thing is controls, and we'll talk a lot about, and I'm going to defer to Ousmane on his perspective there today. I think that we are at a really interesting time in terms of the technology that's available, ours included, to be able to bring you much more intelligent reporting. What we find is one of the best things that we're bringing to our customers is structured data assets that you can interrogate to understand and bring that R&D kind of radical transparency. We also think it really levels you up in terms of financial reporting. Now, beyond just accruals, and we're going to get in there today, I think it's important to note why clinical financial excellence matters more than ever. Again, we heard a lot about it from the first two panels. Capital efficiency and runway visibility is very important in today's fundraising environment. Whether you're private trying to find the next dollar or public trying to manage investor interest, especially as we're seeing kind of flight from the sector. In terms of prepping for your IPO, I think we all feel like there's green shoots in the market and things are going to turn around. But being able to tell that articulate story is ground in accurate financial reporting. Then finally, and a lot of what we're talking about today is it's still just a requirement to be able to accurately report your financials. And so I want to share a lot of what Auxilius feels like our responsibility is as a tech provider in this industry is a mirror back to you so you can understand what all of your colleagues are doing. As a result, in a lot of the times, we canvass our audience to understand what's keeping you up at night. And so you'll see on the right-hand side, the biggest kind of themes we're seeing among accounting and finance managers. They're reporting increased audit pressure. R&D accruals are the most intensive audit area. And then I think we all endeavor to close in less than 5 days, but it's not keeping us up at night because it's just always that North Star. So before we get into the accruals portion, I do want to talk a little bit about the capital efficiency piece. So we heard capital efficiency, you've got to prove what you're doing with your money. That is a really nice notion. And it is, it's, I wear the CFO hat at Auxilius. It's certainly what we, as CFOs, need to be able to explain to our investors. I think the how is so much more important in this to you guys in this room, but also it is a very challenging thing in R&D spend. So let's talk a little bit about that, right? When we went out to market with Auxilius, one of the biggest learnings we had was that finance lives way over here in the organization and accounting lives way over there. ClinOps is way over here and we're very dependent on them, but they're very busy and it's hard to talk to them. I think the key with capital efficiency is all those functions have to be in alignment, and you actually have to be in alignment based on the shared data and shared view of what's happening in your clinical portfolio. That means that your actuals have to be at a level that is detailed enough to inform accurate forecasting. To ensure that there's capital efficiency, you need accurate forecasting, not only at the overall portfolio level, you need it at sort of the program asset level, you need it at the study level. You need to understand what the drivers are of the sources of capital over the next several years. You need to understand what's going to happen in your upside scenario. Everything goes well. The FDA is approving everything. You have access to capital. More importantly, you need to know across all of the studies in your portfolio, what is that downside case? And the reality is we can't afford to do that on a quarterly basis anymore. We need to have real-time insights into that to be able to answer the questions on what am I going to do with this capital and how can I prove to you, investor, that I'll be efficient with this capital. Moving on, and I'll share this, I think we heard from investors today, so I won't spend a lot of time here, but I think that this is quite thematically aligned with what was shared. We gave a big market talk at Informa in Boston last month, and these were the themes that we were hearing across the bankers and VCs in our network. What is attracting capital right now? I think we heard it a bit today. Number one, near-term catalysts and value inflection points. If you actually look at the capital inflows and outflows of the sector, we're seeing money crowding in around data readouts and around milestones. So just something to be aware of, especially if that's not happening for the next year. It's just the sort of ownership over runways is even more important. I think the second one is, again, a difference potentially in the last 5 years and as a result of what we've seen with kind of the pullback in funding. We're hearing that investors are looking at teams with demonstrated track record of capital stewardship. So it was easy to get money in 2020. It was easy to spend money, and you didn't really have to explain where those dollars were going. Now you need to not only be able to explain to the investors where those dollars are going, but demonstrate that you have been able to allocate capital and there has been a return in the past. So I think we heard that mentioned before, but investors are investing in teams with that track record. And then finally, the investor narratives with de-risking strategies and differentiation. I'll tell you, we see it across our customer base. You have to have a differentiated story based on the competitive pressures in the current environment. So really important that there's kind of, articulating a path to those inflection points, articulating some differentiated strategy that de-risks the ROI on the investment. I think what's really interesting, and this is a kind of manifestation of that higher scrutiny in terms of investor interest, is what investors are actually asking on the R&D calls. Sharon and I actually really like listening to earnings transcripts, but we're hearing investors asking CFOs for really trial-specific information. So what is the impact of this protocol change on your study timeline, on your runway? To be able to have that knowledge, you have got to build a very granular view of what's happening in your study so you understand those levers, so you can tell the investor what the protocol impact will be. I think the other thing that we're seeing across our portfolio and then the broader market is that portfolio rationalization and a strategic shift to the lead asset where you can de-risk that investment. We're seeing that again also in investor calls. They're asking you, what's your strategy? Where are you going to deploy your capital, and help us understand how we're going to get our money back. So I wanted to share that. I think that's kind of high level on what we see from clinical trial financial management needs. I do want to shift into the kind of tactical piece around the fact that most of us in here are responsible for the financial reporting of our companies. So not only is there more work to do to ensure that you're talking to investors correctly, to ensure you're talking to the market correctly, But we're also seeing that there's a lot of work to do to ensure that we're staying compliant within the market. I think one of the really interesting things, right? We just talked about capital efficiency. We just talked about G&A spend. But as especially public biotechs, you're also contending with the fact that you are required to report at such a level of detail that that you can defend your financial statements. And that takes people. It takes people. And so that is what's upping our G&A spend relative to where we want to be spending those dollars. And we're seeing that play out in how much effort is being deployed against auditing the R&D accruals. Again, I find these stats fascinating. This is, again, from our customer base. 80% of biopharma leaders report heightened audit scrutiny in the past year. So there's more attention being paid to financials. Ousmane's going to talk a lot more about that. 84% cite clinical trial and R&D expenses as the most effort-intensive audit area. Now, I think for a lot of the biotechs, that is the majority of the financial reporting. But we're seeing that across both our biotech and then into some of the larger biotech and small pharma. Other interesting thing we're seeing, and we track these as well, is the SEC commentary on clinical trials. And so this is really the request to disaggregate the financials. Honestly, it makes sense. They're asking for further disaggregation by product or indication to provide investors with transparency related to the company's resource allocation decisions and to assist investors' ability to assess program viability and prioritize risk. And that goes back to the can you talk to us about program or asset level specific kind of financial detail? Where this is manifesting in our customer base. So the Auxilius platform, we streamline accruals for R&D companies. And our platform enables companies, we're methodology agnostic, right? So we can enable you to take in your vendor confirmation file. You can set a forecast or expense model within our system. You can use your clinical data or EDC data with your site contract data within our system. You can use percentage completion from any of your any of the business partners. We're seeing for this specifically folks who were historically using expense models where the puts and takes sort of netted out across the portfolio, realizing that they need to have a better command over the nuances and the timing of clinical trial spends. So we're seeing this shift towards folks who are dependent on an expense model, supplementing it with a vendor confirmation, and then also supplementing it with Auxilius's proprietary investigator intelligence so you can kind of have your own view of what's happening on the clinical side. This is driving better accuracy in financial reporting. Now, I don't think that I have to explain to you guys why this is so hard. And what makes it so challenging to be able to, when your CFO comes and says, how much is this program costing me? Tell me this week, not for last quarter, but tell me this week how we're trending on our clinical study. It is quite a difficult question to answer, especially if we are closing the books in one Excel spreadsheet and we're creating our quarterly forecast model in another spreadsheet. And then clinical's over there with a patient enrollment curve that doesn't match either of the things in the finance and accounting workbook. And what exacerbates that, right, is that we're dealing with a really complex outsourced vendor ecosystem. So we are fully reliant on these third-party vendors to provide us with this data. One thing, and this is a side note, this is my hot take from listening to these panelists today, I am encouraged that there's more competition coming into the CRO space and that there is more competition coming into the CDMO space. I think there is an over-reliance on these vendors, and so they get away with a lack of reporting. And this is not villainizing CROs or CDMOs. They have a great purpose, and it is very hard for them, I understand, to be able to give vendor confirmations timely that have accurate information. But I like this notion of tech-enabled entrants coming into the space with the expectation initially being we want transparency from our vendors. So I think that's going to be a net positive from a lot of this innovation in this ecosystem recently. I think one of the other things, and we'll talk a little bit more about this and how it actually impacts Runway, is this unreliable communication chain. So much of what we're doing is asking a CRO to report on what happened at these sites. And that's where you're starting to get this game of telephone. And we see this actually coming out in inaccurate data reporting on the investigator side. It also happens a lot with your pass-through vendors. Who has a CRO that manages 5 vendors and you've never gotten more than one line item that says pass-through? That is a really tough thing to help you're talking about being able to forecast your study. If you have no idea what this pass-through cost actually came from, how do you accurately forecast that study? I think the final thing is just lack of data uniformity and consistency. I just had a conversation this morning on how the vendor confirmation file comes in a different format quarter over quarter or month over month. We all know that it's very easy to build SQL queries and scripts in your Excel file if you get the exact same file every month. I think what we've dealt with at Auxilius, and we've done it through a mix of technology and clinical experts internally, is be able to manage the fact that that data comes in very different methodologies, but also just formats on a kind of month-to-month basis. One of the other key things, and I think this is one of the things that gets me so excited about Auxilius and so excited about what we're doing with our customers, is that there is a lack of data uniformity and consistency in this industry, which means that you guys never get to harness the power of your own data. So you go to contract for your next study, and there's no good way to say, am I getting totally hosed at this site, even though I've contracted with them 4 times before? I don't have that information readily available because it's sitting in a PDF site contract, and I don't know how to standardize French site contracts. So it's really one of those things that I think one thing that our customers really value is this data uniformity and consistency that comes in. And it's because it enables you to check the trends within your study. It enables you to make more accurate financial reporting statements. And it also really enables you to make those more accurate capital efficiency calls. Final thing for me, and then I'll let the smarter auditor talk, but this is one of the kind of case studies that we actually see across our ecosystem. And this one is fascinating. And I think it really ties together this notion of accurate financial reporting, getting our accruals correct, and then the operational implications that not having the accuracy here implies. One of the things that Auxilius offers is we do a kind of bottoms-up build on the investigator side with all of your site contract costs. We bring in all the EDC data from your patient visits to all of the long tail invoiceables and those high-cost invoiceables. And then with our investigator reconciliation product, at a transaction level, we're showing you where there's deviation between what's being paid and what you are seeing in your own clinical data. I think that there's a really fascinating thing. Number one, I can just tell you consistently, and this is I'll die on this hill. The investigator reporting from your CRO, it's not right. And it's not, the reality is it's not right because it's lagging, because they are waiting to hear from sites, because they're waiting for those invoiceables to be able to report back to you. And so that just is the name of the game. You guys have all gotten those big catch-up invoices when they've gone through their reconciliation, where they've summed up all of their invoiceables and ended up giving that back to you. What we generally find is that those vendor confirmation files don't include the longer tail invoiceables. And so it's really a more cash basis estimate than what you need in terms of accurately depicting what's happened in this study. What's actually more interesting is part of this investigator reconciliation is showing you what the average delay is, well, the actual delay between when a procedure happened and when that invoice was received. And I think what that shows, especially for folks who are tracking runway really closely, is a really important trend in terms of, okay, I know I need to expense this cost this year, but the cash may not go out the door for another 8 to 12 to 16 months. We're seeing on average, I don't think it's going to surprise anyone on the geos we're seeing the biggest lags on, but there are material lags in terms of when that invoicing is occurring. And so it not only has expense ramifications if you're waiting for your CRO to report, but it also has real cash implications as well. So now I will turn it over to Ousmane.
I'll be the Debbie Downer. I'll be the one that's going to talk about the auditing process. So maybe just to level set expectation here, to let you know how we view the clinical trials accrual. For us, it's an estimate, and the former auditors here will remember that to audit an estimate, there's different ways to go by it. First, you start with a model, right? So how do you get comfortable on a model? there's data and assumption being fed into the model, right? So maybe when the company has Auxilius, you can rely on management model, and instead of reinventing the wheel, have a very accurate and precise testing of that model. Or when the models are way too convoluted for whatever reason, whether operational or just, fact of the matter, you can form your own point estimate and compare the outcome of your estimate with what, the client has put together. So when you think about that, right, there's a couple of common issues that we see oftentimes, and I think that, Erin was alluding to that, is this whole notion of late reconciliation that most of the time actually comes with the first item, which is incomplete support. Like, we've seen multiple times, like, site data missing, you ask for several confirmation for different programs, and then, 2 of the 5 confirmations, are missing. And then the last point here, which is inconsistent methodology. So we do understand that, sometimes depending on the program or, the CRO, the estimation method might be slightly different, but it's really important to a certain extent to try to streamline those methodology to bring some consistency, something that's going to be repeatable, defendable, and that will allow management, to just bring some speed and efficiency in this process. And then our recommendation. So obviously, the first couple of ones here are extremely self-explanatory, like early review, right? I think it's really, really important. And when I say review, I'm not just talking about, the finance team, talking to cleanups and, connecting with FP&A, but bring the auditor under the tent, because at the end of the day, right, if we have a clear understanding as to what are our expectations, which format, are we expecting to see, and what are we seeing as well, in the industry in terms of best practice, it's just good added value for management. The last point here, that one, makes me smile oftentimes. It's this whole notion of controls. And we see controls as something that's extremely punitive, annoying. People were talking about, getting rid of, SOX. I can tell you that I have clients and CFOs that told me that SOX has been the best tool for them to bring cleanups and people that are far removed from financial reporting to a certain level of discipline. And he was like, don't blame it on me, blame it on SOX, right? The reason why I'm asking you, the cleanups leader, to complete this checklist, do this, and that, it's not because I want to annoy you. It's because if we don't report properly, we might end up with a material weakness, which is going to hit the stock price, and that might hit your savings, right? So as a cleanups leader, come under the tent and let's all, work together. So I really see this notion of ICFR alignment as a good tool, to bring discipline holistically in the organization. Let's not just, take it as a bitter lemon. And my advice is, try to make a good lemonade out of it. So what look good when it comes to clinical audit readiness? Erin mentioned it a couple of times, like, forecasting and then accurate patient level. So these 2 bullet points in my mind, come hand in hand. The end of the day, it's extremely hard to have good forecast, right? If the data that you are getting on an actual basis, from site, is incomplete, because that's just going to bias the whole model and, basically give you something that won't be reliable down the road. And I think that she mentioned it a couple of times as well, this whole notion of data. Data is gold now. If you can have a well-structured, actionable data, that opens up the door for a lot of AI and insight application that nowadays, most of the time, you can't necessarily use or develop because the data is all over the place. Like, Excel spreadsheet that don't have the same format, PDF that, are extremely hard to get through OCR in order, to get the digits that's going to allow you to standardize it. So if you can get to that level, there will be a lot of application that, could be open down the road. And then the third point here in my mind is probably the most important, is this notion of cross-functional data sharing. Cleanups has to talk to accounting. Accounting has to talk to FP&A. And those 3 parties all need to speak the same language, and we can talk about it, later on, but I've seen some disasters and deals and IPO that almost didn't happen because of this very same reason. And then the last point is very selfish from my side. It's, early audit readiness. Don't wait, for the auditors to ask for XYZ reconciliation. Like, what I'm always saying to my clients is like, this is not a gotcha exercise. Like, let's sit down and we can share a template with you. We can tell you exactly what we want to see, how we want to see it, give you best practice as well as to how to make this process the most seamless possible, because it's just a win-win operation here. And then I think this slide is pretty much, summarizing what I just said. But at the end of the day, what we really want to see and expect to see is methodology documentation. Give me a piece of paper, a narrative, something that says the why, the how, the who, the when, right? A clear methodology as to how your clinical accrual is being formed and thought about and substantiated as well. Substantiation, which, is tied to this estimation rationale. A couple of months ago, a client of mine, we're going through the process, and then they had an accrual for some tox study, right? And they had an assumption as to what is the cost of a monkey from Charles River, right? Because they never really got an itemized invoice to really pinpoint the single cost of a monkey, that person made an estimate that was based on some old invoice he got back in the days. Didn't really ask the question to the cleanups team as to, hey, could you get me the price point of a monkey? And because, and I don't want to get too nerdy here in terms of accounting standpoint, but Charles River oftentimes ask you to pay some very hefty prepaid to get your spot, and then depending on where the animals are coming, when do you release that in expense? So the whole estimate was kind of wacky, because in his mind the single cost of a monkey was $60,000, which at some point it was, but that's not the case anymore. So really make sure that when you make those type of estimates, where, you're basically basing your numbers off. The other point as well is, timely reconciliation. And we talked about it. Like, don't wait the last minute to make sure that, everyone is on the same page when it comes to, what the numbers should be. Consistent application of your methodology. And once again, the two last point, blame it on SOX. Like, use SOX to drive this notion of control, discipline, and being able to have an audit trail to substantiate, what's being done, who's doing it, and why people are doing what they're doing. In a nutshell, that's just what I wanted to share here with you, Jess.
Great. I have a couple more slides, and then would love to facilitate some Q&A with Ousmane since we've got him in the room. I'll summarize this. This is a very self-serving slide, I'll be honest. So what do you do with all of these challenges and what's the solution? I actually would try to keep it quite objective. We know that the problem is a manual and reactive process. And I think one thing I'd add is in a lot of times based on not intentionally, but flawed assumptions. And that poses a lot of challenges. I think what we're seeing and kind of outside of Auxilius or any technology is this need for data harmonization across functions, across data types, and then being able to actually use that data to sense check and drive insights elsewhere in the organization. We also obviously are going to say that workflow automation is really important. And I think whether it's Auxilius, whether it's another tool, I think as G&A spend is coming under scrutiny, it's important that we're not just deploying more and more heads against trials as we're scaling portfolio footprints. So letting technology do the heavy lifting in terms of the manual work of bringing data into the platform so that you can spend a lot more time looking at what's happening in the data and making those accurate judgments. What we see in terms of customers who are really kind of thriving while using the platform is, I think a lot of times we see faster close just because you're not spending time, creating your 50-tab Excel worksheet. You're spending time actually looking at the data and looking at the variances across periods, looking at what's driving from kind of a granular level, both the differences in the studies, the variance between what you anticipated was happening. I think technology in general enables more of a focus on the insights that are coming out of this study. And so I think that's where we're trying to get our customers is out of that data entry and really into that insights layer. I truly believe that accounting can be really good thought partners back to finance and back to ClinOps. I think it's no longer kind of the ClinOps just comes or accounting is just going to ClinOps for the answers. I think if you build this really kind of key data asset, then you can be value back to your ClinOps counterparts. I also think, and one of the last things I'll say, which I thought was interesting, is that Confirmation and really clarity around your methodology. I think using a system enables you to document that methodology and then keep that methodology quite consistent because you have like real kind of controls and automation built in around those processes. I'm going to leave you with my kind of 5 strategic imperatives. And again, we're jumping around a little bit between kind of Office of the CFO and then a lot of the kind of tactical considerations. But these are like consistently what we've heard across our full customer base. Number 1, deeply understand the drivers of your scenario. So that's down to enrollment trends. That's down to like the geographic implications of anywhere that you're expanding or thinking about opening. The second one is prioritize accurate actuals as a foundational unlock. So we think hygiene around accrual accuracy not only keeps you on Ousmane's good side, but it also unlocks your ability to really strategically forecast. Defend sources and uses of capital as you're out in the market and demonstrate a track record of responsible capital deployment. So really being able to tell the story and show the track record of that. Leveraging technology and automation is a strategic unlock. And then finally, kind of back to why Adam and I started this business, exercising operational discipline and cost and vendor management. So bringing transparency and accountability back to this industry so that A, you can get the data you need, B, you can be capital efficient given this like reliance on the outsourced vendor ecosystem. So with that, I know we have about 10 minutes. I thought it would be good, since we have a life science audit partner in the room, to ask him a couple of kind of what he's seeing in the market. I want to start, Ousmane, with horror stories. I feel like, again, as I mentioned, a lot of people like to know that they're not alone in, preparing their financial statements and dealing with clinical accruals. So can you share some of the, maybe put it into perspective?
Sure. And one that sort of comes to mind right now, given the fact that people are saying that the IPO window might reopen, there's actually a story that still gives me PTSD. We were in a situation where the company was in the last mile needing to file a confidential S1. During the business session, when the S1 was being drafted, right, the COO made a comment about a significant change order and a retroactive price change as well from one of their CROs. The chief legal officer said, "Oh, it's all good. We've signed the agreement. We're good to go." The CFO was a first-time CFO, investment banking background, no real accounting background, and no, I'm not taking any sort of, that's a profile, but I'm just saying.
Thank you, Ousmane.
I'm just saying that group
I'm kidding.
collectively did not realize the implication of what was going on when we were, I would say, maybe 2.5 weeks away from, potentially, getting things on file. And then for whatever reason, the controller happened to be in the call that day, ping the CFO and say, "Wait, what are you talking about? Like, what's going on?" And then very quickly realized that, if it wasn't for that comment made, right, we were basically on the verge of, having potential a restatement down the road, because they needed to go back, change pricing, a work order, was connected to things that have already started. The CFO, again, what great banker, but never really run a finance organization. And yeah, that still gives me PTSD, because when I think about the way that as an auditor, I was tackling that, right? I don't ask, well, now we do, but never really asked the chief legal officer, have you signed any significant amendment to your clinical trials in a work order, right? Usually just ask him about litigation. And that's not something that you discuss all the time as well, with the CFO. So we got lucky, I would say, but that still gives me PTSD. So again, it really comes down to this notion of, making sure that everyone is speaking the same language, and then the information is diffused, throughout the organization when it comes to this.
Makes sense. Kind of next question for me, because you have an interesting kind of role in helping organizations potentially go public, or you're in that path. What's your crystal ball say in terms of kind of the return to public markets?
So that's funny, yeah. So that was at the Biocom CEO Summit last week, and there was a panel with folks from Fraser and a BC firm. The sentiment says that JP Morgan will give the first indication, but then there could be a significant number of transactions on the back end of 2026 that would actually start in early 26. I mean, some of you guys in this room are probably even already getting ready or thinking about getting ready. We feel that pressure as well for many of our private companies that are asking us to speed up the process because they want optionality. And again, as a finance leader, you hate to be the person telling to your CEO or the board that, hey, we can't file because, I'm not ready. So there's this huge push in terms of readiness. Now, I don't know if it's wishful thinking or if, bankers are trying to make a market, out of nowhere, but there seems to be, some hum of, optimism.
And then last question from me, and I want to preface this by saying our view at Auxilius is that AI should be deployed in very specific ways, given the fairly risk-averse appetite of our customer base. I think I'm actually, though, more interested in the audit perspective and the appetite for AI in accounting workflows.
That's a good question. So we've actually updated our audit protocols like a couple of years ago to start embedding those questions around AI. Like, do you use AI for any of the numbers that you're providing us with? And, does it impact your trial balance? Or have you used AI in any way, fashion, or form? What I'm seeing, and when the answer to those questions is yes, at this point in time, most of the time, it's summarization of complex agreement, right? I started seeing it when it comes to flux analysis and, basic FP&A, right? There are some pilots where, finance teams are actually using an instance of GPT, building a model, training the tool as to, okay, when there's this type of variances, it might do to this, which actually come down to what we were saying earlier. You could only do that if you have a clean data set, right? And if you don't clean the data, you won't be able to take advantage of, all those, enhancements that AI now could provide in terms of insight. But actually, one of my clients recently used GPT to draft a shell of a leasing memo. Got them there at say 75%. There's a lot of nuance issues that the tool, wasn't able to grasp, but everyone is going to end up using AI, and I'm seeing the trend here coming more and more.
And how are you? Obviously, you're shifting what you're asking of your clients, but how are you shifting your testing regimen as a result? If the answer is yes.
So first of all, with the key question that we're asking, or what we need to understand first, is what's the governance about AI? Like, who's taking the decision? Who has the control? Whatever assumption or data that you are using, who's validating it? Once you have an output out of the machine, what is the structure and the controls in place to make sure that, AI didn't just elicit I don't want to get too technical, right? But most of you guys know that this is a statistical model, right? It's not really that smart. It doesn't really understand, but it's telling you, it's just it's programmed to know that 99% of the time, the next word after the sky is blue, right? So someone needs to make sure that the output actually makes sense. And yeah, so now there's a whole control regimen, coming along, and that's actually launch, new businesses that are solely dedicated to AI governance.
And just final thing for me, show of hands in the room, who's using AI in their accounting workflow to do the core accounting work? Would you be willing to share how? So for those who didn't hear, leveraging Bill.com's AI engine to streamline AP automation. Before we go, any questions? That's a great question. I'm going to answer it in two ways. Number one, we're agnostic. At Auxilius, we're agnostic, and we ingest vendor confirmations regardless of the CRO and standardize that and put it in a way that you can leverage that data. So we're taking a lot of the pain point of this, the fact that Syneos and IQVIA's budget grids look very, very different. Now, in terms of the CRO appetite, it's interesting. We had an early, when we were starting Auxilius back in 2020, we piloted with one of the big CROs. And they, in general, and we've talked to many of them since, and they share your pain, actually, in a lot of ways. And they, we've heard them, and I quote, they've said things like, I give them no data and they complain. I give them all the data and they complain, and we just can't win. So I think that's a little bit of the perspective from them, that there is some appetite to make this easier. I don't think their intention is that they're giving you data that you can't really work with. I will say that was not our only CRO pilot. We've had many more discussions since, and I think it is a matter of prioritization. So this notion of reporting, it's a nice to have, and they would be maybe willing if they truly believed it was a differentiator. But it's low enough on the prioritization that we have not seen like broad engagement around a standardized reporting methodology. I think that gets exacerbated on the payment side. The CROs have such little control over the sites that is the biggest challenge in reporting. I think it's why we've built our own proprietary taxonomy across all of the sites, visit costs and invoiceables, so that we have some notion of standardization. But I think that is even tougher for CROs to drive based on that kind of ecosystem of site reporting.
When this business, started, we're like, okay, now there's an app for that, right? So it makes our life, much easier because, the system create the data. There's a lot of reliability that goes into it. It comes down as well to the point that I was trying to make several times, this notion of consistency in the methodology applied. Because the worst thing that could happen, and I've seen that, I had a client like that in the Bay, 3 or 4 years ago. They had multiple programs and then probably 5 or 6 methodology as to how you would treat, some of those activities, like, their trials wouldn't have passed for it. It was just extremely convoluted. A company like Auxilius, what it gives you is this, I just want to use this weird analogy that I just thought about. Like, when you have your Apple TV or your Amazon where you have a bunch of subscription, you have one spot where everything is there. It is safe. It is reliable. You can access it whenever you want. So it does make a significant change for us, and it's also changing the level of effort that goes into the audit.
Right now, in our patient tracker, we're showing all of the projected visits that are not yet coded but anticipated. So we have a lot of our customers who top up their accrual with to mitigate that patient data lag. I think one of the other big things that we're releasing in the next couple of months is this insights layer on where trends are happening. So it's much easier to apply trends and invoiceables from what is in the data, what has been coded at other sites, to be able to layer that on to make a informed assumption. I think we're looking at what are alternative data systems where we can pull the data at scale to supplement that ADC data lag. As of right now, it's the best, most comprehensive view of what's happening at the site. Our view is that everybody in their site contract should be saying you only get paid when you code the data, and it's kind of the most effective alignment in terms of driving better hygiene around EDC input. Our payments reconciliation product does a lot of comparing the information coming out of drug dev relative to what's in your own EDC, and we see some interesting variances. Certainly some alignment. All right, I think I'm over my time. Thank you.
Thank you, guys.